Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Palantir's revenue surge. Don't let PE ratios fool you. This article was written by Income Generator. Summary. Pause. Palantir remains a bullish conviction despite recent flat price action and valuation concerns, supported by strong commercial growth and robust free cash flow trends. PLTR's forward PEG ratio and improving free cash flow suggest valuation is less stretched than headline PE implies, aligning it with industry peers. Key risk. PLTR's low free cash flow yield means the market has priced in high expectations, making it vulnerable to earnings disappointments. Critical price levels, support at $148.20 and resistance at $207.50, signal PLTR is at an inflection point, with upcoming earnings likely to determine trend direction. When I last covered Palantir Technologies Incorporated, PLTR, on October 14, 2025, with a buy rating, in my article, Palantir $1 billion quarter changes everything, the stock was beginning to lose some of the bullish momentum that had characterized share price trends during the prior 6-month period. Given the massive longer-term rallies that this stock has managed to generate, it wasn't completely surprising to see that some analysts were suggesting that it might be a good time to start taking profits. However, in my article, I argued that I was maintaining my positive outlook because the customer count and revenue growth rate in Palantir's U.S. commercial segment would probably continue driving the stock higher into the end of 2025. Unfortunately, this did not turn out to be the case because PLTR shares are actually slightly lower now, despite the small gains of 5.1% that have been provided by the S&P 500 during the same period of time. At this stage, I think investors can look at this activity in one of two ways. First, and more negatively, it can be argued that the stock's upward momentum is gone, and that the gravity of overextended valuations is ready to take over. Second, more enthusiastic investors might argue that the stock is simply basing for the next run higher. I will explain why I believe the positive side of the argument appears to be stronger, and I will outline potential price levels that will indicate a reversal point in the long-term uptrend if my bullish thesis turns out to be incorrect. Palantir's prior earnings results were quite strong, with beats on both the top and bottom lines. The total revenue figure indicated year-over-year growth of 63% and surpassed $1 billion once again. Net income results were even more impressive, at $475.6 million, which implied astronomical year-over-year gains of more than 231%. Revenue from the commercial business improved by more than 2 times, at $397 million, and contract values for closed deals in the segment saw an expansion greater than 4 times, at $1.31 billion. These figures were released not long after new partnerships with Lumen Technologies Inc., LUMN, NVIDIA Corporation, NVDA, and Snowflake Inc., SNWW were announced. So I would say that it's somewhat surprising that all of this activity failed to ignite a surge in share prices. The reality is that the stock has essentially flatlined since then, even though full-year sales guidance has been raised to $4.4 billion with $1.9 to $2.1 billion in free cash flow now expected for the period. In some sense, this should force PLTR investors to take a step back and question what exactly is going on here, because when a stock fails to produce substantive gains when a wide swath of positive information is released, what is going to occur if the next earnings report shows evidence of weakness? Palantir's valuation issues are the most likely explanation for the stock's inability to move higher into the end of 2025. But I disagree, at least to some extent, with the metrics that are typically cited when having these types of discussions. I'll start with a metric that doesn't seem to get very much attention, which is Palantir's forward PEG ratio. Rather than simply looking at the stock's nosebleed level PE ratio, PLTR does not look anywhere near as overvalued when we add a growth component to the equation. Not only is Palantir's PEG ratio below the 1.0 threshold, which, on its own, suggests that expectations for earnings gains are enough to justify an elevated PE, but the stock is also trading near the midpoint of the peer group. On one hand, we can see that CrowdStrike Holdings Inc., CRWD, and Okta Inc., OKTA, might be better positioned at the moment. But Fortinet Inc., FTNT, is much more expensive, and Palo Alto Networks Inc., PANW. PANW is trading in roughly similar territory. On balance, Palantir is still considered to be roughly in line with industry averages, and this shows that a simple look at PE alone is not enough to fairly analyze PLTR. Palantir's trend in absolute free cash flow is also improving, with current numbers that are now printing toward the top of the peer group. Indeed, Fortinet is still looking stronger in this regard. But I am much more concerned with the underlying trend than I am with the absolute figures. As long as Palantir can continue showing expansion in free cash flow, it will remain clear that the company is scaling into a major cash generator. This is important because expansion of cash flow is a factor that can compress valuation multiples, even if share prices do not see substantial declines. If we are going to expect PLTR to maintain its long-term uptrend, I think this might be one of the most critical metrics to watch because it can still justify the bullish momentum. Now, on the negative side, I do need to mention that Palantir's free cash flow yield is an obvious risk because it is the lowest in this industry grouping. What this tells us is that the market has already priced in most of the company's expected cash flow figure. To be sure, this is quite an unforgiving metric, and it implies that even the slightest miss in quarterly performance can cause a dramatic re-rating in the share price. To settle this debate, I would argue that investors should finally consider the differences between Palantir's trailing and forward price-sales ratios. Here, there is a wide gap between the forward and TTM figures, roughly 65x versus 112x. Interestingly, this forward compression essentially proves that the market expects to see significant improvements in the underlying sales trends. If share prices continue trading with this flat trajectory, as we saw into the end of 2025, Palantir's elevated multiples can compress by themselves. Moreover, forward multiples that are significantly lower will typically suggest that a business is still working through a hyper-growth phase that the market expects to continue. Of course, none of this is a guarantee, and with a stock like Palantir, that is, priced to perfection, there is always the potential for quarterly reports to offer an injection of extreme volatility. The next earnings release is scheduled for February 2nd, with consensus estimates for GAAP EPS calling for 18 cents on $1.34 billion in revenue. Normally, I wouldn't place as much emphasis on analyst expectations for the top line and bottom line figures. But when we are dealing with a stock that has a heavy and very loyal retail following and share price gains of more than 2,200% in less than 3 years, it should be understood that wild and volatile price swings can occur if quarterly results fail to match expectations. Personally, I will be watching for changes in free cash flow expectations because this is the metric that I am using as a basis for large portions of my total outlook. In terms of real share price action, critical support zones have developed near $148.20, which marks the lows from November 21, 2025, and the neckline of a potential head and shoulders pattern. There is also a confluence here with the 200-day exponential moving average, so I think that any downside break of this area could signal a longer-term reversal in the bullish trend. Of course, that area has not yet broken, and a head and shoulders pattern is not actually triggered unless there is a downside breach of the neckline. Conversely, positive surprises in the upcoming earnings report should help to keep this support zone intact. If this does turn out to be true, the next major area of resistance comes into play near $207.50, which marks the highs from November 3, 2025. As a result, I do think that PLTR stock is probably trading near an inflection point. Sideways trading activity tends to characterize periods of indecision, so there is a lot riding on the next quarterly release. From a trading perspective, I would let the charts do most of the work, because these aforementioned price levels are likely to work as major indicators of whether...
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.